Good morning, guys. Let's just let everyone in and let's get at it.
Morning.
Morning, RJ. How are you, man?
Good, thanks.
I did the absolutely wrong thing last night. Got up to look at crypto in the middle of the night when I took a piss and couldn't get back to sleep. I was like, nothing like watching charts for 2 hours at 2 in the morning to make it really hard to get back to sleep.
Hey, Quan Shabazz. This is Coach Reg. Call me when you get the message, please. I'd like to talk with you about IPC and make sure everything's rolling for you. You need to go in your back office and transfer your funds for one. Call me 904-53.
One gets muted. All right. Let me share my screen. Okay. And let me just get participants up. All right. Where are we at? Once again, we had a strong move off the lows, expecting a pullback, thought all this was all the pullback we were going to get. Instead, we got to here, ran out of steam. This bar is running out of steam, by the way. That's what an inside bar is. An inside bar is a transition from a trending mode of thinking to a range trading mode of thinking. Broken out the bottom of the inside bar, which is the same as saying it broke out the bottom of the range. We have open at the lows, close at the highs, expanded range, indicating that that is not the stopping point. This, to me, did not look like a stopping point yesterday. I made a video about it, but I didn't think it would drop this far. So where are we at? Let's look at the 1 hour chart. So the 1 hour chart shows it clearly. This is the triangle stuff we had yesterday. This looked very suspicious because it got right out to the tip before it broke, and it looked like it was going to break down. It broke down much harder than I thought to the downside. Now, you can tell when one of these sort of cascade things happens, the end is not at the small candles. The end is when the candles get very big. And so this is the end of that round. Futures funding rate flipped negative. We have an attempt. We're back to two-sided buying here now, right? This was more extreme than it should be because it's a Sunday. So probably if that wasn't Sunday, it might have stopped about here. But instead it got to 37. We have a big attempt to drive it there after the selling pressure had been soaked up. We're going to look at the whales jumping in a minute and see if that was that. This does not look to me like it's going to hold. It looks to me like we're going to hold around here, but that a stop loss here would not hold. So what I think is probably going to happen is some sort of shit that I don't know what, but like one little spike and reverse, and that looks like the end. Why do I think that? Big move. Still a big move, but smaller than the one before. We're running out of puff. If it gets to here and then goes down, something like that is pretty proportional. So we're running out of steam on the way down. The last parts of each move are the fastest and most violent. So we see that here, and we see that here. What we want to see now, the real question is, does this change the game? Now, right now, this is a two-legged pullback. This is still exactly what you want to, exactly what you would expect to see, like a two-legged pullback in any bull market. That's the highest probability. And, we had a two-legged up move as well. If this holds above this, that's our key now. If this holds above this, the bullish structure is in place. If this holds below here, that probably does technical damage. Now, obviously, there's a war going on right now, which is why this happened. But you zoom out and in context, this isn't too bad considering what happened. It's quite common for big rallies to start on bad news after a little whip one way. So I wouldn't read too much into it. So the bottom line is the structure of the market is still intact until it gets to here. And let's just put a little line here so that we know. Hey, buddy. What's going on? You sit there and be quiet. All right, now, interesting things. Ethereum Bitcoin, we thought on Saturday that it would stop around here, and stop it did. If we look at the hourly chart, Ethereum Bitcoin is showing strength compared to Bitcoin in the last day. Not really. No, it's gone down over the whole day, but it bounced hard off the lows. So the last half a day, let's drop it down to a 4-hour chart. In the last half a day, we've seen Ethereum making a bit of a fight back. All right, now let's look at the rest of the altcoin universe. For a start, let's figure out what days. Let's look at it through this whole period from the top here, from the 10th of February. What's it? It's 18 o'clock. Okay, so coins that have beaten Bitcoin, KNC, Luna, Rep, FTT, Atom. Ethereum was down 3%, not a big deal. Sol was down 3%, not a big deal. This all looks pretty random. Certainly no momentum effect there. But what is interesting is that if this was a new bear market, alts would be getting slaughtered. And really, aside from the bottom couple of alts, most of these alts are pretty much holding steady, like within the range of plus or minus 5% kind of thing. That's pretty good for that sort of move. What that's telling us is that altcoin holders aren't selling. They're in for the duration. They're not buying either, but they're not selling. Now let's look at the Glassnode stuff. Okay, now it's axiomatic, guys, that you do not sell in a market panic. Absolutely. If you're going to sell, you sell before, you sell after on a bounce. You just never ever sell on a market panic. It's just it's the worst idea in the world. It's always twinged with emotion. You nearly always end up selling the lows. It's just so. The bottom line is when markets dislocate, you take your hands off the steering wheel. That's the first thing that you got to do. Okay, let's look at. Let's look at exchange balances first. Okay. Exchange balances are going down here and going down since there. Let's look at it on 1 hour chart. So exchange balances going down means that people are withdrawing their money from exchanges and the bullish fundamental structure is still in place. That's what we're seeing. Wow. Okay, so we've got more of this. So what that's telling us is, let's go to the supply per whale. That's probably going to give us a good idea. So what I'm suspecting is happening is that we have the situation that's been in play for a little while now where derivatives traders, I see what's happened here. Okay, so there's a little bit of whale dumping with the derivatives sellers. So whales have been buying since here. They're dumping a bit here. And when whales dump, usually it sends the market down because it goes with the leverage traders. So let's take a look at perpetual funding rate. That's the one. Okay, interesting. So let's zoom it right in. We're going to talk about war in a minute, babe. Come on.
Scott,
Hey.
what is the perpetual funding rate?
Okay, so this is interesting. In the real market, like the gold market, like the crude market, the contracts end on a certain date. Like for example, the crude oil contract for this month ends at 4 p.m. Chicago time on the third business Friday of the month. That does happen with some crypto futures. The Chicago Mercantile Exchange has crypto futures. Some of them have real futures. But to make it easier for the dummies who trade crypto, they made these things called perpetual futures. And what they do is they have a balancing mechanism. So when, for example, it's like a market, and the balancing mechanism is here, longs have to pay 0.05% per 5% per year to go long, and they pay it to the shorts. So what that means is that if you're short here, you get paid to take a short position. Right now, everyone goes short, and the shorts have to pay longs to take a long position. Now, if you see what happens at the times when it turns red, when the shorts have to pay for the privilege of going long, they generally get fucked. The types when longs have to pay a lot for shorts, they generally get fucked. So it's this continuum between these, and these small little things here, they neatly time the wiggles of the supply and demand of the leverage traders. So we have three groups of traders in the market that are dominant. We have there's more than that actually. We have miners who are the biggest sellers. We have derivatives traders, and we have whales, including institutions. And so what we're trying to do is they can go together or they can go against each other. Here, the whales are selling slightly, and the derivatives traders here, you can see we're very short. So the whales selling and the derivatives traders short got on. So here we see a little bit of a flip negative, which means that derivatives traders get who want to go short have a problem, and it rebalances it. So this is bullish, short-term bullish on the derivatives traders. I doubt this one's gonna hold. I think we're gonna wiggle around here all day, especially seeing it's the. Now we can break this down by exchange, and the exchanges sometimes have really substantial differences. Binance is the big one in Asia, and Asia has a profound negative edge in the Asian session, by the way. So you can see it looks a bit different with Binance. Yeah, Binance is ripping its customers off is what it looks like to me. They're either all on or all off. That's not very nice. Okay, we're gonna so the bottom line is that perpetual funding rate indicates that we're probably going to stabilize around here. It doesn't look to me on a price action basis that that's going to hold. The whales are selling a little bit. Yeah, very mixed picture here. So let's look at the 1 hour. Okay, so these bars here, what you're seeing really clearly is a market that's in balance. How do you know it's in balance? Because we have an up bar, we have a down bar, we have an up bar, we have a bar that goes up, closes down, we have a bar that goes up, closes down, we have a bar that goes down, closes up, we have a bar that goes up, followed by a bar that goes down. Whenever you have this situation, imagine it like a tug of war. And one side, they're just equally balanced, and one side eventually will get tired. So this here is not buyers jumping in, it's one side getting tired. When one side gets tired, the other side can win for a little bit. And then the question is, do buyers jump in and support it? And that hasn't happened here. So both longs are tired and shorts are tired. The conclusion that I would draw is that this is really, really balanced on a knife edge. Still, when it's balanced on a knife edge between buyers and sellers, it becomes very difficult to predict. And you can predict that the part of it that you can predict is that, you know, points that you don't think are gonna break will break. So, for example, you can expect that, which looks like strong support, not to be strong support. So the bottom line is, I suspect we're going to have something like this today, and then choose a direction. I strongly think the direction is up when the whale stops selling. Let's see if we can zoom in. Just see a little bit of buying here. Not enough to know for sure if that's happening. Yeah, large cap altcoins held up very well. Small cap altcoins got savaged. Woo is the one that I'm worried about. It's getting technical damage here. It's a 1 hour chart. It looks terrible. That's right. Huobi is the best chart to look at for this. So we're back down in the trading range here. It's a long-term trading range. When you get a long-term trading range, the highest probability, once it gets to about here, the highest probability will be to vacuum to that bottom of the trading range, at which point it becomes a very strong probability buy. I can't rule that out happening yet. It looks like it's got further declines to go. If those declines stop well above here, we should be good. If those declines get past here, we're probably going to suck back down. I wouldn't sell. I'm not selling. I'm thinking about buying more. Yeah, this is probably the highest conviction play that I have. As far as the rest of the market goes, you can see that this is the S&P 500 futures. You can see we have a big gap down and it's going. We can see gold is going big gap up. That is my largest position as it happens. Gold with the stop loss right here. After a year of doing nothing, it's finally doing something. And you can see we have this characteristic look of a market which is starting to trend. What do you know when you have a market starting to trend? You have micro gaps early in the thing with follow through. So this is what's called a gap and go. And we have another little gap. that's a sign that buyers are pretty horny to get back in gold positions after a year of hating gold. And this looks like a completed retest after a low. So gold gets above here, it's going to go for a run probably to $3,000, $4,000, $5,000 pretty quick. So that's one to keep an eye on as well. Anything else you guys want me to look at right now? Before that, let's talk about war. So war, geopolitical events, there's two situations. One is it just bad news? Like scary news? If we're in a bull market, scary news shouldn't be messing with us. Scary news should cause temporary, like pushing a beach ball underwater and then it bounces back harder. Like when China banned Bitcoin, like 100 bad Bitcoin users. If we get contagion, and what I mean by contagion is that everything starts going down. Gold starts going down. Stocks start going down. Everything starts going down together. Then, and people need money because they're getting margin calls. Then they will start liquidating portfolios, and then those portfolios will include some crypto, because when you need money today, you sell the thing that's most liquid, and crypto is most liquid. So we have two situations. Is it a contagion problem, or is it just bad news that the market's already priced in? And in general, it's the biggest mistake of all to trade on news. In general, it is. For every time you get it right, there's 5 times you get it wrong. You know, the worst news crypto had in years happened right here. So no, I wouldn't get out. The structure of the market is still bullish. This is still a retest of the lows. But what I think is, if this is a retest of the lows, we need to see, the market has to show us something pretty soon. So we can't still be here next week with the market down here and it's talking about that. I think that would change the game. What we need to see really quickly is wherever it stops. I think it'll stop in the next day. We need to see a visible from space sort of rally over the next 2-3 weeks, and really it has to be at least to here. If we see anything aside from that, then almost certainly we're in a trading range. Okay. Super interesting. ANC hit its all-time highs, did not close. The high here is 6,380 and the close is 6,357. So it didn't close above all-time highs. At a close above all-time highs, the fix is in. You can expect some profit taking there because there's a bunch of guys who were there's always profit taking at all-time highs. So in context, that looks pretty fine to me. That's a big swing, and we got it right. No point selling for a 30% profit. That looks good. Anything else you guys want me to look at? Yeah, let's look at NIA. Not so bad considering it's held. Not so bad at all. Let's look at it compared to let's look at that whole sector. FTM, Luna, AVAX, Sol. Those are probably the leading coins. So let's just keep it to those, and let's make it from
Matic.
Yeah.
Hey Scott, this is a bit of a subjective question. When you look at the altcoins, right, do you have like a price that you think that they can achieve that you just kind of know in your gut, or do you just know that they're going to go up and you'll assess the price, you know, in real time?
Okay, so there's two situations. If it's in a trading range, I always have a price. If we're looking for a 30, 40, 50% bump, I always have a price. If you're looking for a breakout runaway coin, that breakaway runaway coin comes with the trifecta. The trifecta is the market going up, the sector is the hot sector, and the coin is outperforming its buddies. So if you get those three, it becomes a positive feedback loop, right? So George Soros has this theory called reflexivity, where what causes a bubble is two, or at least two, and ideally three inputs to the price. And what that causes is a self-referencing feedback loop where it goes up, attracts more buyers. That going up puts it on hot top lists, which make people sell it less. And in that situation, there's no telling how high it can go. It can go like fucking Neo was trading at $200 in the last bubble. You can get like crazy valuations become irrelevant, and it can go crazy. If we get that situation, you want to sell at the peak of craziness. And so that's what we typically did with Sand and Shiba. We waited until the peak of craziness, the peak of hype, and sold at the time when everyone was loving it. So in those situations, it's a buy them when they hate them, sell them when they love them situation. And you can't put a target on it because because they can go a lot further than what you think. And selling too early is usually a mistake. When you don't have the trifecta of hot market, hot sector, hot coin, these things are a leaf in the breeze. The smaller the coin, the more it gets locked around. So near second worst of the decent of the decent layer one coins. AVAX is the clear winner. We need to put in Sol here as well. Yeah, so since the market lows, it's down 24% against Bitcoin. This whole sector is not looking good. I wouldn't give up on the sector until we see some market strength, because when we see some market strength, it's been beaten down so much, it'll probably get a very, very big bounce. Could wipe that out in one day. But overall, I'm seeing early signs that this is not going to be the right sector. And as soon as we can get a reasonable result, we'll be out. Now, OMI is... that's still looking fine. That's exactly what we would expect for a 200 million cap coin in a pretty substantial bear phase. Strong bounce at the trading range lows, which we're looking at. So that's a trading range. So that becomes a very strong buy right now. STX. That's not looking so good. But we're in the middle of a trading range now. And in the middle of a trading range, we don't have an edge, long or short. I would sell it breaking through the bottom of the trading range. So it's nowhere near selling it, but I wouldn't buy more either here. XYO. This one's ready for a long squeeze. There's a lot of bag holders here, which probably means it's unlikely to get back up to here. But at some point pretty soon, and it looks, at some point pretty soon, you're going to see one of these big bars on that. This one is, you can see it's very two-sided on the way down, soaking up sellers. When it does that, it's ready for one of these. If you get one of these and another big bar up, I would sell out. Titano. Haven't got it on the charts. Toko was in the shit. I looked at it. Really looking bad. It's just a laggard, so it just hasn't performed as well as the other coins. It's probably going to stabilize somewhere around here. So I probably wouldn't sell it if you have it. CRV also unfairly beaten up. It's holding above the lows from the 14th of February, which is nice to see. As long as it's above here, it looks pretty good. Flux. No opinion on that. That looks very, very hard to read. Right, guys, that's all I have time for today. I have another call with another client, but I'll be here 4:30. This is 8 a.m. for me, whatever time it is for you. I'll be here at 4:30 p.m. again, if there's more stuff you want me to look at, and I'll send a video out for it too. Okay, guys. Bye-bye.
Cheers, shut up.
Thanks, Scott.